Why has gold broken above the 2000 level and why it is likely to stay this way for a long time to come? This is because the US dollars has been weakening since October this year, and in the same time in October this year we can see that the gold has been strengthening, and we can observe this inverse relationship between the two of them during this period as well as in the previous period. My name is Kon Hao. My work in this channel, as always, is to study behavior science and finance, discover correlations between different markets, and uncover potential opportunities. And before we discuss about this topic, please do take some time to read into the disclaimer. Gold moved in the opposite direction with the US dollars, especially when the US dollars was unpacked from the gold standard in 1971. So therefore, gold became a currency pair against the US dollars beyond just being a commodities. And let me just illustrate the relationship of a currency pair between the pound and the US dollars. Now, when I say the pound coming down, I'm referring to a pair. It means that the pound is weakening, the US dollars is strengthening. And this was a period where there was this UK bond crisis. And since then until now, the pound has appreciated. Against who? Against the US dollars. When I say the pound appreciate, it also means that the pound has been strengthening and the US dollars has been weakening. And let's go back to this slide again. So when we recognize that gold is beyond just a commodity, it is a currency, we just have to shift our thoughts as gold as a currency. It means that gold versus the US dollars. It also means that when I'm seeing that the US dollar start to decline, and there's a good tendency that the gold will start to appreciate. It means that gold as a currency pair, if I'm seeing that gold will continue to appreciate, but it also means that US dollars should depreciate. And therefore, it's important to also understand the direction of the US dollars. And let's take a look at what happened to the US dollars. And I would like to use the dollar index. As we can see here, it tracked all the way back to the 80s. And we can see that this dollar index has been on the decline over the last few decades. And this is how I draw my classic downtrend line. And of course, I will encourage you to visit my previous video where I give instruction how to construct a classic downtrend line. And during this period, as we can see here, where I did observe that especially during this period, it's not just fall on this downtrend line, but I also saw this bearish engulfing body and plus other fundamental as well. So since then, in October 2022, I know where the US dollar's direction is heading. Moving forward, I think years to come, I'm seeing the US dollars to head down. And towards the end, we will discuss about the fundamental reason. So this is my projection for the US dollars. As it come down, it may retrace, and I think gradually it will come down. So of course, this is technical. I will really encourage you to look at the fundamental reason to back it up. And with that reason, that since that US dollars is a likelihood that will come down, and I'm always mindful that gold is trending up. And for that reason, I'm always looking for buy on dips opportunity. And here we could see here in the October period where we discussed, gold has been declining, but yet I'm mindful over the long term that US dollar seems to be depreciating, not just technical reason, but fundamental reason. So this was a period where as it declined in a gold, I'm mindful to look for a buy on dips opportunity. And during this period, I saw that there was a hammer. I know it's not a very clear-cut hammer, but the next day I could see that there was a gap. And this symbolized that there's a buying opportunity back then where you could buy here. And of course, if you're a trader, you can put a stop below this low. And what we're looking at here is the micro gold futures in CME. And of course, you can also try other commodities futures or the spot gold if you want, or the physical gold. So basically, in short, my context in the gold or my strategy in the gold market is always looking forward. As the gold decline, I'll take it as where is the buying opportunity. And we can see that there's another gap here, which is a runaway gap. And I'm not looking at the gold as being weak here. When there's a runaway gap, I'm seeing that it's still moving very strongly. And to track gold's ability to maintain this upward trend, the direction of the US dollar is play is crucial role. Now, what is your take on the future of the US dollars? With a number of rating agencies downgrading US Treasury bonds over the years, I am not too optimistic about the US dollars. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.